In this video, we are going to talk about the ways by which we can analyze the financial statements. As accountants, we are expected to be competent in preparing and presenting the financial statements in accordance to generally accepted accounting principles. However, equally important is our ability to make some sense out of the financial statements. That is, we can interpret what we have prepared. Financial statement analysis is the process of examining the financial statements to evaluate the financial position and performance of an entity for decision-making purposes. There are at least 3 techniques in which we can conduct financial statement analysis. We have horizontal analysis, vertical analysis, and ratio analysis. In this video, we are going to focus on horizontal and vertical analysis. Horizontal analysis is the technique where an item is compared to itself across different periods of time. This is to see whether there's a growth or decline in that particular item. In order to demonstrate how this is done, let us refer to the following case. TNT Company had sales revenue of 200,000 in 2018, 300,000 in 2019, and 500,000 in 2020. Assuming 2018 is the base year, perform horizontal analysis. How are we going to perform horizontal analysis? Well, let us start by taking note of the time periods involved. In this case, we have 3 years: 2018, 2019, and 2020. The sales revenue in 2018 is 200,000 pesos. 2019, 300,000 pesos. 2020, 500,000 pesos. We should always take note what the base year is, because we are going to express everything as a percentage of the base year. Everything should be expressed in reference to the base year. So, the base year is 2018. This will be our 100%. Again, the sales revenue in 2018 is 100% in horizontal analysis. This will give us 2019, 300,000 over 200,000, 150%. 2020, 500,000 over 200,000, that's 250%. Again, we are going to express every other year in reference to the base year. So if we are asked about the increase or decrease in the sales revenue, we can simply arrive at it by deducting 100% from these percentages. 2019, there is a 50% increase from 2018. That's 150% minus 100%. 2020, there's a 150% increase. That is 250% minus 100%. Again, horizontal analysis is a technique where an item is compared to itself across different periods of time. As a result, we also refer to this as trend analysis. Let us now proceed to vertical analysis. Vertical analysis is a technique where a line item is expressed as a percentage of another item, called a base, within the same financial statement. This is to be able to identify the components or the breakdown of the base item. Let us refer to the following case. Perform vertical analysis for the balance sheet of QRC Corporation. Summarized balance sheet includes cash, 6,400. Accounts receivable, 7,200. Inventory, 12,000. Current assets, 25,600. Non-current assets, 54,400. Total assets, 80,000. Take note that when performing vertical analysis, there are general rules as to what the base item is. For the balance sheet, the base item is generally the total assets. For income statements, the base item is the net sales. So since balance sheet is what is given, our base item is the total assets. Let us refer back to our balance sheet. Now, since this is a balance sheet, our base item is total assets, 100%. Breakdown. Cash, 6,400 over 80,000. That's 8%. Accounts receivable, 7,200 divided by 80,000. You have 9%. Inventory, 12,000 divided by 80,000, 15%. The total current assets is 25,600 or 32% of 80,000. Non-current assets is 54,400 divided by 80,000, that would be 68%. At this point, we were able to identify the breakdown and what proportion of the total assets are the particular items. In the next video, we are going to talk about ratio analysis. The following are the types of ratios. Liquidity ratios. They technically measure the ability of an entity to meet short-term obligations. Solvency ratios. They measure the ability of the company to survive in the long run. Activity ratios. They measure the ability of the entity to efficiently use its resources. Profitability ratios measures the earning ability of the company. That would be it for today. Like, share, and subscribe.